All right, good evening or good night. Welcome to the end of day review for today. We do the recording for today a little bit late, so just heads up right now. So today is it's Tuesday, May 7, 2024, and it's the second trading of this week. This week we don't have any really high impact news. It's just maybe a very low, maybe here will, and maybe here wholesale, so and employment, and maybe consumer sentiment on Friday. By the way, we are in week 19 cases, and this week we don't have a option expiration, but next week we do. And also next week we have CPI data release. So let's see how the market gonna move. Set up for CPI, very interesting. We have read some article that said that the CPI gonna come down. So that's the reason why you see the last 2-3 days the market just rip up. Can you believe that? Yeah. So the CPI release on this is GDP data, not CPI. CPI right here, so it's May 15. Will be next Tuesday right now. And yeah, and then after that we go to this GDP data, the same economic circle right there, and then non-farm payroll and the Fed meeting gonna be in June. We believe, or everyone anticipate that the Fed gonna cut in June. They may cut in June, so that's that wait and see. The way the market rally for the last couple of days can indicate that someone have someone bet on the move that the Fed gonna cut. All right, going to today, we see a gap up. The last 3 days, we see the gap up. But before that, let look at the daily and the weekly. Let's see right here. What do we have right here? So we use 20-day moving average right here. So that's the line right there. So on the daily, it did break down and then it go back up. But for the weekly, it barely touched it and then it bounced back again. So that is the state of the union we have right now. But the last 2 days, I mean 1, 2, 3, 4 days exactly. I saw from Thursday last week. You see, it's huge rally. It broke everything. You see right here, you have a market bearish breaker, fair gap, break it, and this level is also closed up. So let's see. We anticipate maybe some pullback. Look here, we can see some pullback right here. So let's see. So we mark this level, the high of this level, right? So high of that level. $51.93. 51.93, and this is a weekly. So we do weekly Yeah, so just break this level for this week, and very interesting. That can be a short right there. Whenever you break, this is a failure gap right here. Above the failure gap, it's also a good time to aim for a short right there. Yeah, this 2 key level we what at the weekly time frame right there. So basically we see that so the high of this candle 52 51 23 50 23 50. Yeah, we discussed this before. So you have a breakdown at that level, and then you have reverse back right away and retest above. So let's see how this gonna behave. When it come down here, test it level, it gonna break it. When it touch, it gonna break. Because it's already test above, so that's what we are aiming for the whole week. Not this week, but maybe next week or so. Let's wait see. Because we never know, right? You never know. And also watch for this level. If it go up, that's a great level for to watch right there. Yeah, let's take this screenshot for now because it's gonna be the end of day for today. So 7. So we gonna save it. Yep, we're gonna save it to our daily journal right here. And yeah, so it's a weekly and daily. Weekly and daily. End of day. First today we kept over trading, so look how we did right here. So basically for today we take another loss, so we have 2-day loss in a row, and we have 1, 2, 3-day win, and then now we have 2-day loss, and this 2R, and this is around 1, more than 1R. So basically this week so far we give back our gain 3R, right? So I have to find a way to bring it back. So basically we are around right here, right? 3. Yeah, we'll cut over trade, which is too much trade, which is 12 trade, right there. That's a lot. We over trading today. And go into, let's see the last trade we take. Right, let's move this out of the way. The last trade we check is right here at this level. Actually right here we see the equal right here. It's the equal. Yep, that's the equal, and you can see that right here. We check 12.3. Wow, we count only 8 trade. I don't know why the report says 12 trade. Maybe we tell too many and we forgot. Oh, I see. I see, because some of the trade that we are add into the position, so that's maybe the reason. We see it now. But right here we have equal low. Equal over here. 50, 10, 50. Okay, perfect. So we have equal over here. Right there. By the way, why that level is... Oh, we way up there? Oh, okay. So we see the weekly level right there. Yep. We see the equal right there. And up here, it's amazing. Today we have equal high right here. What the high of this is 52.24. See that? 52.24. And that's where the short coming. Right, but let's go backwards, reverse and engineer. Actually 9 trade. From our end we took 9 trade. So here's the number 9 last trade we take. So right here. So basically our logic is that right here, this level, it already tests above 1, 2, 3. So there's no way that it's gonna come back and touch it level. The only reason it come back is to broke it. But today the market say no to us, so it's amazing. It just touched the level and it go back. So very interesting. We haven't seen this before. Maybe we put the wrong level. If we put this level low right here, it will never touch it. You see that? So that's maybe. So next time if we see this level and the level right here, we go with the latest level right here. That be more accurate. So that's the lesson we learned right there. So yeah, we can add this. That can be give us some some condition right there. Some condition right there. Yeah, so put a note right here, so next time we know. We know that the low of this candle, let's see, what time is it? Low of this candle right here, 40. Where's the latest one? The equal low. You know, because we give the equal low some significant right there. At 52, 10, 50. Which is what is I think we messed it up right here with it. yeah, we have to see the low. If the low of this candle is 52.10, the 2 pip, below. Yeah, 2 pip below. 2 pip below. Yep. The low of the candle 52.10 is better than, I think it says use. The equal low at 52.10.50. That's our idea. Yep, so that's the node. Yes, so it just does our level and then boom, it go back, and that's so wrong because it will never touch it. So that means that level may be not significant. This level is more significant. Yeah. That's the lesson that we learned from the trade that we. I think let's do. I think let's redo this. We just let's see. The low, right? We just the low of candle 14, which is 52.10, is more significant than the equal low. Why? Because is the most recent. So when we deal with this, the most recent, we take the priority, take the precedent. Yeah, that's the word we try to say. Yeah, we try. That's right. Okay, so that's how we thought it gonna break it, but it touched that level. So this level it never touched. So we may have choose the wrong level right there. So basically, you see right here it touches and then it go. But we pinged out that next time we should the two level right here, this level and this level. Hold on, I think not this level, but let's look at the screenshot we got again. Yeah, so basically we go in and we put stop loss above here and we get hit in the same right here. We got entry hit in the same candle right there. But another level, okay, right, two level right here. You see that? Level 51.1275 right there. 52.1275. Which is this level. Yes, 1275. Let's analyze it so we see the idea. 1275. Perfect. 1275. Wow. 76. Do not show on this one. So basically, when at that moment we have to make decision, right? We see that is break this equal level and it reverses back right away, and then it's retest from above 1, 2, 3. So we say, wow, that means it's gonna break it. And at the same time we see, wow, at this level, you see that it's breaking down, and then it's retest 1, retest 2 from below. Then we're thinking that it either gonna break this level, and it did break all the way, just put back right there. And so next time we have excuse. So next time we have to flip, right? If our thesis right here is now got longer, but like we can go long, and at least we go long right here, we can get out. When it hit this favorable gap right there, at least we can hit this level right there. Right, at least level we can get some use out of this at this 3 point right there. See that? So yep. So we have to know how to flip right there. You see that's this level. It's either break down from here or gonna break from this level when it go down there. So next time we have to learn how to flip, because market is gonna flip. So we have to learn how to flip right here. So let's put so we can say that it can go long at this level. That's the lesson we learned right here. Let's do it again. Because the reason why we go take a short right here, because we give this trend. We just follow the trend. Basically we thought it could break down, first leg down, the last 30 minutes it's gonna make a second leg down. That's what we betting on, and it turned out it's not enough time. The market not gonna make another leg down, so the market not go the way we want. Yep. So basically we can go long. Go long at 52.1275. If it fell to break down at 52 1050. And and we can go short at 52 1050. If it's if it break it down right there, yeah, let's save it. We will name it when to switch. Today when to flip. Yep, that name when to flip. When we see in the tight range, then if it felt this direction, then we go to the opposite, so we can flip them. Yes, so basically we want to see the second leg down, but it did not, and that helped us to learn one thing right here. So when we see the heel legs down like this, and we see that it sweep the sell liquidity one time right here and two times right here, and with the rejection that is, then we know that the retracement here, right, heel leg up, and retracement here is complete. So we don't try to short them. That's an idea right there. I think we do have a swing shot of that. Okay, right here. That's the idea. So look at this. So we can recognize. We did take the short right here and we get out on this candle. But we should not to let it make a second leg down. The reason why it can make second leg down, because you see that this candle make a higher low, but right here you see the retracement, it come back when it make a lower low. So that's give an idea right there. When it make a lower low, then gives you that you better get out. But in this case, stay in the trade. Yeah, so that's the whole idea right there. And also it rate this, social liquidity 2 times. Yep. So very critical right here. We have to understand this part. I think let's make this right there. So that means that it make a high low and it still drop the social liquidity. Hold on. Let's put it more into a contact right here. So we see it's in the rally rate. So now we know when is the retracement right here is complete. When you see this, so when a retracement and that's the question right there. That's the $1,000,000 question. So we can get out. If we short today, we short right here. We catch this move, but we can't get out early around here. So we want to see, what we can learn to make sure that when the retracement ends, if it ends, then we get out, and also we don't try short again. So that's the lesson. So, and also that we know that when it fill a gap right here, maybe this go to the regular trading hour, or we can see the gap very clear. Okay, this is the 15 minutes, but it's regular trading hour. You see the gap right there? Yeah, and when you see the gap is filled. Yeah, simple as that. It's end when it feels right here. It's not end yet. It's not end right here. Yeah, here's much perfect. Perfect than the other charts, because this on the regular trading hour. When you see the regular, when we use regular trading hour, you can see the gap. So the question we still rate, when a retracement and when you see retracement right here, right? It's going up and it's retrace. So okay, we can say that is the retracement does not end at 40 because what? Because the sell side liquidity not yet rate, and not yet rate, and the gap is not filled. So that happened because in the real time, when we execute a trade, we saw this pullback, we get scared. So we get out, we take early profits. That's why we need to review and to see why we did what we did, and then so we can improve them. And here's what we improve. We see that not end right there. And it will end when the gap fill, and exactly, you see this gap fill, and you see that the sell side agrees with 2 times. 1, 2, right there. Yeah. And the retracement is complex or n for that matter. Let's say that you do sample n when surface is so at least twice, and the gap is filled. Yeah, so that's our observation right here. Yep. It not end at this candle, but it end when you see it's with the sell shadow clear, right? At least it's with this candle, right? Low by this candle, and then it's whip one more time, twice right there. Yeah, let's save it. When a retracement and yeah, this can give us some information right there. What's going on? Yeah. Oh, they don't like that. Oh. Oh, they don't want a question mark in the file name. Very interesting. Huh? We should find out. That's it. I don't put a question mark in the file name. We give window give you trouble right there. And that's so okay, that's our last trade right there. And the trade that we caught, trade number 9, I think trade number 8. Yeah, this is the trade number that we are talking about, the same number. I think it should be number 9. Okay, let's see if this trade yeah, we also short right here because the idea that we thought that it's gonna be breaking down, second leg down, because you see it's break the level and we reverse back and it retest. That's what we try to do right there. And I think trade number, yeah, that's trade number 7. I think here's our entry, the same right there. Yeah, we thought they're gonna break this level. You see right here is test above, break back, equal right here, it's gonna break this, but it did not. 15, we thought that at 15 it's a good time to go in. 15 right here, that's amazing right there. It's a beautiful setup right here. We don't know why now. Okay, you see it's break it back and test above. Those imperfect, but we're going, it didn't happen for today. So that's the good loss right there. And here's our trade number 6. Okay. And trade number 6, we short right there at 12.50 to 11. We're thinking it's gonna reach that level, but it did not, so we just close out the trade. So yeah, we just close out. We see that not follow through because we put a buy stop rate, a sell stop rate here. We thought it gonna break it and hit right here, but it did not hit, so we got out. And here's our tray number 5, which is the one that right here. As soon as we saw this break it out, we're going right away. 1 p.m. right there. It's a perfect tray. We're thinking about go early right here, but we did not. We should build a cell top right at equal high right here. Perfect right there. But then anyway, we take the entry late, but it's still perfect. Right here, you see we cast a huge down move, even though we go perfect, we go here, but if not, then we should go here. And number 5, we close, entry, close, where else close? Yeah, like we say before, when we saw it go back at level, we close out, but we learn our lesson because we thought we're gonna reverse, but we don't know when the retracement gonna end. But now we reverse engineer, we look back, it's not gonna end here, so don't worry, stay in the trade. Go through a little bit tough time when it's, get back some gain, but wait until sweep this sell liquidity and fill the gap. That's the lesson we learned. Right there. So basically right here, we just remark right there. So we exit right here when we see retracement, but we should not. We give a lot of money back right there. We should wait for this sell liquidity sweep right here, which is at this candle, or sell liquidity sweep at this candle and a gap or fill. Yeah, we leave a chicken nugget right there. We get out right here on the trade number 5. We catch a huge move right there. Yep, that's the big lesson learned for right there. Alright, we can try to wrap up here. We try to keep about 45 minutes. Before we wrap up, we want to point out something really quick. So you see the phenomenal, you see the 930 right here. So we can just use the candle range theory right there. 930, you see that? So it breaking down the 930. Look at that, it breaking down the 930. And then it reverse back right away. You see, break it, reverse back away. We kind of confused when we saw that. We're not sure how to trade that, but now we can see that as soon as it break it back right away, and then it break it one more time. And then it's not it's not a setup they want to see. We should not force our here. But look at here, you see the 930 and then the 11. That's where we anticipate for breakout. A reverse gonna happen, but it did not happen. You see that it did not happen until in the PM, and it fit into the ICT setup right here, which is the 130. What happened? Yeah, 130 Euro swing. It did happen right here. 130 right here. You see that? The 30. It rated the buy side of the long time. It did happen. So our long time is from right here at 12. Yes, right here at 12. See that? It's very accurate right here. See, as soon as it rate the the high, which is the buy side liquidity right there, boom, it gone down. Only 30 minutes, you can catch a huge move. Right? If you have a courage, you can go right here, or at least at this level, you can have 3R right there, or which is a gap right here or equal right here. Yeah, 31, roughly 3R right there. Alright, I think we run out of time. Thank you for your time and interest, and we always grateful for the opportunities. We do what we love, then success coming our way. Bye for now, and good night, and good luck and good trading. See you tomorrow.